right. Welcome to our seventh and final U-Talk series for this academic year. My name is Chuck Bowl. I'm the director of the Masters in Real Estate Development and Urbanism at the University of Miami. I'm joined by Dr. Andrew Hewson from the Business School, the director of real estate programs there. And we have a terrific final topic and panel to close out the series today. We have our biggest registration of the year for the series, so I know you're looking forward to hearing our panelists' discussion. I want to thank our real estate advisory board members. This was a series we launched recognizing we wouldn't be able to have our annual impact conference this year in person. And the board members have been great in supporting this series from the MRED program in the School of Architecture, the Miami Herbert Business School Board in real estate, as well as the School of Law's Real Property Development Board. Thank you all for your support. Today's topic is tech. It's the future of real estate is tech. There's so much buzz about this topic, and it is very much connected to what's happening in South Florida through the pandemic. Tigray Wenrich, who's also a member of the MRED Advisory Board, will be a panelist, but also moderate this session. And he wrote the teaser for this session that investment in startups serving the real estate industry grew by over 60% per year over the past 4 years, elevating Proptech from a niche market to one of the most important categories for venture capital. And there's just an enormous amount of interest around this in South Florida. So Tigray, I want to turn it over to you and let you welcome our panel for today.
Great, thank you, Chuck, and thanks for having me, and thank you to our two panelists who are both pioneers in the world of Proptech and also very closely linked to both the city of Miami and the university. First, just a little bit about me. I run Lab Ventures, which is a venture studio where we actually build startups from scratch at co-working space in Wynwood. That's the picture behind me, which was really the first co-working space in Miami, opened in 2012. And I've been working with early stage technology companies for well over a decade. We started Lab Ventures a few years ago in this space, looking as a way to kind of institutionalize what a lot of us were doing, helping early stage entrepreneurs to get off the ground. And then we recently also launched a new fund. It's a seed stage fund investing in Proptech companies, specifically Proptech, a rolling fund on the AngelList platform. So we're not only building our own startups, but we're also starting to invest in other people's companies. As Chuck alluded to, Proptech wasn't even a word 4 years ago. The people who keep the statistics on this kind of stuff report it was about $1 billion a year, which may seem like a lot of money, but in the context of $150 billion a year industry that is venture capital, it was really just a drop in the bucket. But in 2017, it really started to take off. It was over $30 billion invested into Proptech startups in 2019 and close to $25 billion last year. Some people call it CRE tech, Proptech, there's construction tech, there's lots of definitions, but no matter how you slice it, it has become a huge category within the venture capital world. And specialist investors in the Proptech scene are still very relevant, but all of the large generalist funds, the names that you've all heard, Sequoia and Andreessen Horowitz, are all investing in Proptech. You can't really be in venture and not be paying attention to what's going on in Proptech. And the reason that we're still excited about it is, despite how much money has started to pour into this sector, it's still really early days. The real estate industry and the construction industry have been very slow to implement digital technology. There's still many manual paper and pencil based processes. And that is beginning now to change. but there's still a very, very long way to run, we believe. So we're going to get into all of that. Let me start by introducing our first panelist, Eric Fetter, who is the president of Lennox, which is the venture capital and corporate innovation arm of Lennar Corporation. Eric, in addition to that, has been a longtime employee of Lennar, used to run an investment arm called Rialto. He's also on the board of directors of some of their portfolio companies, including States Title and Hippo Insurance, which are both in the process now of merging with SPACs. He also serves on the board of governors of the Sylvester Comprehensive Cancer Center and is a past chairman of the Miami Dolphins Cancer Challenge. So he's a great contributor to the local community. Welcome, Eric. I mean, you guys have been really leaders in the Proptech movement, invested. It was reported earlier this year that Lennar has invested over $300 million into 20 different startups. You're in some of the biggest names in the sector: Open Door, Notarize, Blend, Hippo, States Title, with yesterday's announcement, Smart Rent. How did you guys get, what inspired you guys to start doing this? How did this come about?
First of all, hello and nice to be here. Thank you for having me. So look, Lennar has always been on the leading edge and very innovative, very entrepreneurial. And years ago, the mantra in our halls was evolve or die. And it sounds, it's harsh, but it's true. And Stuart, years ago, recognized the need for us to rethink the way we just market and recognize that digital marketing was the future, and set a mandate many years ago to start the transition from traditional marketing methods into targeted digital. And that was the beginning of the journey. I watched this from a distance while I was at Rialto, and knowing that Rialto was going to be sold, I could not imagine leaving my Lennar family. So watched and with great interest, the team beginning to think about technology, innovating, change management, and just picked it up. And Stuart and I, over the last few years, have been running in the direction of just changing and evolving the company. And it's been a great journey.
So what's your investment criteria? You are not really a fund, right? You invest money from the balance sheet of the corporation. How do you guys think about this investing mission?
Correct. The name Lennox is relatively new. Historically, we've been Lennar Ventures, and people would mistake us for being a fund. We are investing our balance sheet. We have a very laser-focused approach to how we invest. It's got to be a true adjacency to our core, or part of our ancillary businesses. So whether it's our Lennar Financial Services Group, mortgage, title, homeowners insurance, closing and escrow, or if it's our core home building operations. If it does not fit, if it's not plug and play today, or if it's not, there's not a clear path to making it a part of our platform, we do not get distracted. That's kept us on track, kept us focused, and it's worked out quite well for us. And it's important that I note, we invest, you asked the question, we invest in all stages, very early on, and we'll, into growth stages. You mentioned Smart Rent, it's a perfect example of one where we just entered, we just joined their last round. In fact, we just recently closed the round. I joined their board, and here we are, we're pivoting to the public markets as we speak.
So it's a strategic investment first, financial is second. However, you've done really well financially. I mean, it was reported in the press that just on 3 of those deals, you stand to make a 1.5 billion.
It's hard for me to say also, T.
I assume you probably can't talk about that, but you guys have done extremely well on financially, as well as, and I want to get into sort of the strategic part in a minute and kind of how you work with these companies. But let me switch over and introduce our other panelists today, David Goldberg. David is the general partner at Alpaca VC, which is, I don't know if I should still call it a New York-based VC or not, but David was one of the one of the venture capitalists who moved to Miami last year, and part of all of this buzz around Miami being the new place. He's actually moving back to Miami because he's in addition to that, he's a alum, and we were happy to have him at the lab. Actually, his first office when he moved down here last year. David's also a Kauffman Fellow, which is a really big honor within the venture community. Former entrepreneur, he was the CEO and co-founder of Freshneck, a consumer-facing apparel subscription rental startup. And his early career was in finance before becoming an entrepreneur. So David, you run a more traditional fund structure, but the origins of Alpaca are actually connected to a real estate company. Could you tell us a little bit about how you got started and how that works?
Sure. Thank you for having me, and thanks for moderating, Tigray. And I apologize to everyone. I'm a little under the weather, so you'll have to forgive me. Thankfully, this is virtual. So Alpaca and its predecessor funds goes back to 2012, when we started investing originally off our balance sheet and now in a traditional fund structure. And we originally spun out of my partner's operating company, which is Corrigan Holdings and Corrigan Real Estate, which is really a full stack, vertically integrated real estate owner and operator, mostly across the multifamily space, predominantly in New York and Florida, ironically. And so, my partner Ryan was making investments, one, I think, to help his portfolio and build and buy software to help uncommoditize a commoditized asset class, as well as leverage that real estate and use those insights and learnings and business development to make better investments on both sides. And ultimately, I think we had to make a choice around what our top priority was. And, we said, let's leverage that to be top tier investors. So we are now a traditionally run independent venture firm.
But you have made a number of early investments in some big Proptech names. I think probably everyone's heard of Latch, which is also going public in a SPAC, right? Compass, which just went public in a traditional IPO, Bowery, a bunch of others. When did you kind of pivot away from just that to being a more of a generalist venture investor?
It was kind of always that way from the beginning. And again, my background is not in real estate. I've learned a lot over the last years through osmosis, whereas my partner Ryan, one of my two partners, Ryan, focuses the predominant amount of his time on real estate technology. I'd say it's about 35% of our portfolio. And then, as they say, real estate touches everything, right? There are consumer companies where we leverage the buildings for distribution to customers, for example. We're invested in a furniture company, which obviously has some roots. We don't consider it a prop tech company, but it sells into multifamily operators and hospitality companies. So depending on your definition, it can go a little bit broader than that.
Awesome. Well, I'd like to ask both of you, and whoever wants to go first, but first question is sort of why do you think that technology in this sector, in real estate and construction, has taken so long to sort of come of age? And what is it that has driven this inflection point we've seen over the last couple of years? What's changed?
David, you want to go?
Sure, I'm happy to give a perspective. I think there's two driving forces behind that. One, there hasn't really been a need, and by that I mean, anybody who's been in the asset class, especially if you're a multi-generational family, in New York City, you've done quite well over the last 20, 50 plus years. Whereas you've seen tech companies in other industries come and go much more quickly, right? For example, Blockbuster, top of the market one day, within a couple of years, you're now sort of out of existence. That doesn't really happen in real estate. So there hasn't been nearly the drive to innovate and stay ahead as people have done well. I'd say the other thing is it's just more complicated and there's more stakeholders, right? You have owners, managers, landlords, tenants, lenders, and then a physical asset beyond just software. And so I think things are just a little bit slower. I mean, the traditional model that we've seen is somebody pitches something, maybe you get a pilot in a building, then you slowly roll out to a single portfolio. And then from there, you can start going a little bit wider. And that can take multiple years, if not longer?
Yeah, for Lennar, like Lennar has been around since 1954. Home building is there's been very little, if any, change, and the needs and wants of our customers is evolving and evolving very quickly. And as the world becomes more digital, we recognize, we see today how easy it is. I'll use as an analogy the car, the automotive industry, particularly what Tesla has done, and the elegance and the joyful experience it is to buy a car. It's 100% digital, from sourcing it to selecting your options, going through the purchase, the financing, the insurance, the delivery, so on and so forth. And if you compare that to what we put our home buyers through, our purchasers we drag through the mud, the process of finding a home, and anyone that's attending today, I'm sure, has experienced in some form or fashion. It's fraught with friction. I mean, the process of applying for a mortgage, going through title, closing, escrow, homeowners insurance, there's no reason for it. So that was the first area that we attacked, and are trying to land on what we'll describe as a one-tap close, similar to what Tesla has done with their customer journey, their customer buying experience. So that's the first thing that we focused on. And then if you look into the way we build homes today, very little, if any. I think that we have graduated from swinging a hammer to having an actual nail gun. Other than that, very little, if anything, has changed. So the way we build homes, and the fact that we still site build homes today, is hard to fathom. So we recognize that we better figure this out and figure it out quickly, because somebody will. Somebody will Amazon the home building process. And so that's something that we're laser focused on here at Lennar. And then the way our customers live in their homes, the home has certainly changed, particularly in the wake of COVID. The home is just no longer a place where we sleep. The home is now a home office. The home is now a home gym. It is now a home school. It is a place of worship, many different things. The communities that we build have changed. So, that has really accelerated our thinking and our innovation and change management. Over the last year, we've learned a lot. And so, it's the engagement that our customers have in a home, and how they live in the home. And then the last thing that really has helped change our mindset is, how do we keep an engagement with our customers beyond the close and with technology? Historically, home builders build homes and they close with their customers. They hand the customers the keys. And I'd say for the most part, home builders say, please never call us again. Because if you do, it's typically a warranty claim. Turning that on its head, these customers in our world have made one of the most important financial decisions of their life. We've earned their trust, and why not keep that engagement and continue to stay engaged and involved? And there's a whole host of things that we can do with technology to maintain that engagement, that relationship.
Yeah, I think that's kind of been the holy grail for a lot of the companies that are focused on home automation or in multifamily around tenant amenities or tenant experiences. How can you, instead of having a bunch of individual point solutions like Latch, which began as a IoT lock that you can unlock, open with your phone, right? To actually kind of controlling the entire experience, whether it's a home that you purchased or a home that you're renting, but from finding the place, signing a lease or buying the property, managing your day-to-day life, like who is going to be the operating system for that entire process? No one wants to have 100 different apps. I mean, I have an alarm app, I have an app for the lighting, I have an app for the air conditioning. They're all unrelated, right? I know that's kind of everyone wants to be that, but how do you guys see that evolving in the next couple of years?
I'll throw my hat in the ring here. And it's interesting because one perspective that we have that many, Proptech only investors don't have is that we look across other sectors. And that's important because, as we discussed, real estate is often a laggard. And so we're able to see patterns, trends, what works, what doesn't work in other ecosystems. And often what you see is founders especially often start building for the consumer first, right? It's easier, they understand it, you can start selling one by one. So in this case, it might be tenant experience, co-working, co-living, something on the mortgage front for consumers. But ultimately, it winds up going more to the enterprise, which here is, the owner, the landlord, the property manager, or the lender. That's a lot harder and a lot longer of a sale. You have security implications. It's just harder to get buy-in. But if you can get there, it can be much bigger and much bigger quickly. So I think what we're starting to see now, I think we're right now at that shift or in the early innings of that shift of very qualified and well funded, because it takes a lot more funding because you can't show that short traction as you go, and sort of trying to take that big vision and build something massive that can take down multiples of these verticals all at once versus going point solution by point solution. I don't know who or what exactly it looks like, but it feels like it's being built right now.
You want to add to that, Eric?
I have a lot to add. I don't even know where to begin. I first wanted, so what you first described, T. Ray, is app fatigue, right? So we experienced that with our customers. We delivered a home with many different IoT devices, Internet of Things devices, and home automation pieces, and they never spoke to each other. There was, the Ring doorbell rang, the Ring app came up, and then you have to open up your Schlage app to open up the front door, and then so it became tedious, and so we listened to that feedback from our customers, and we recently announced, and this is not a plug, but it kind of is. Our homes are now connected homes powered by Ring, and we worked very closely with Ring and the Amazon family to develop a one app solution for home automation and a connected home across our platform. Historically, Ring was a closed system. Ring recognized the need to integrate with others. And so Ring has worked with other manufacturers, other devices that we offer as a part of our Everything's Included package at Lennar. And today we do have one app that powers all of our devices. And I think more to David's point, what you're going to see is there will be more and more of this collaboration, integration. Like we learned early on in the startup world there's a little bit of hubris in the technology space amongst founders, and just a little bit, and they can build everything. And so, it takes time and maturity, not just maturity from the founders themselves, but from the company standpoint, to recognize, stay in your lane and focus on what you do best, and then recognize who else across the industry you can collaborate with to become the best version of yourself. So we're seeing that start to happen amongst some of our portfolio companies, where historically they refused to interact, but now we're seeing much more interaction, and it's proving to work quite well. There's no one winner take all, I feel, in any of these areas, and so there is a need to work together and to collaborate.
I can also add, T. Gray, and this might be obvious to many of the folks here, but beyond integrating with one another, right? Like all the consumer-facing apps in one place, it's really imperative for anything to get any scale to integrate with all things on the back end, specifically the accounting systems. And we see that trip up a lot of companies early on.
And they are notoriously hard to work with, especially some of the bigger legacy systems.
Yeah, I didn't know who was on the call, so I didn't want to name names, but yes.
Yeah, well, I will. I mean, we've tried to, we've got some really early stage projects trying to integrate with Yardi, which is probably the market leader, and they just don't even want to do it. It's the financial barrier is huge, and it's very hard to work with. So, and also, I mean, all of those guys, Yardi, RealPage, Buildium, Appfolio, they all want to own the whole experience as well. So someone comes up with a really cool individual application for tenant screening or for, whatever that functionality is, those guys are kind of implicitly your indirect customer, as you said, because you have to integrate with them. You can't have it not be integrated because the enterprise user won't do it. But they're also your competitor, because if it's a good solution and the user wants it, it's maybe they'll buy you, but more likely they'll try and just build it themselves. So it's a very complicated space, especially multifamily, because of the role of those traditional accounting systems, property management systems. Eric, I wanted to go back to something you sort of started to talk about, which is how you have two hats, right? You're the head of a investment arm, but you're also the head of innovation, and kind of not to say that it's easy to invest in startups, but I imagine what's really hard is to actually get the company, the traditional part of the organization, to work with the companies that you're investing in. Like, how do you make that happen?
Yeah, so it's tricky, and I do straddle both sides. The investment side, which quite frankly is the easier part of the job. Writing a check. Once you diligence a company appropriately, it's the change management, it's the implementation, as we like to say sometimes affectionately. It's trying to get our dinosaurs to dance, and it's the hardest part that we have learned. And we have a whole team that works with our platform across 38 divisions to make this work. And it took some early wins for us to prove that we do make a difference. You mentioned earlier, it's not just about the return. So there's a quantitative result we look for in our investments, but more importantly, we're looking for the qualitative results. How do we make ourselves better? How do we improve margins? How do we improve the product that we build? How do we improve our customers' experience, like the engagement with our customers? We have worked very closely with our partners, our portfolio partners. We get them involved very early with proof of concept, with piloting with our operating divisions. The beauty of this engagement is we help the portfolio companies adapt and learn what it means to be a partner with a production home builder. David mentioned earlier, they're very consumer centric at first. And so, when you look to scale something and get to more of an enterprise model where you're working with a home builder like us that will deliver over 60,000 homes this year, it's a totally different mindset. So engagement early on with our operators, letting them have a voice with our portfolio partners, or soon to be portfolio company partners rather, getting buy-in from the very top. So this initiative starts at the C-suite and it trickles down. So this is not done at mid-level. There's buy-in at the top, and we find that we get collaboration across the platform. And it certainly helps when a lot of these companies start to make a material difference to our P&L.
David, to some extent, you guys are doing something similar, right? With your with Corrigan and with some of your other investors. Like, what are the challenges, and sort of what's the secret to success to making those connections work?
Yeah, so we think about leveraging the physical assets in two ways. One is to due diligence and gain insights before making an investment, like in that decision. So we'll test things out, run a pilot, or at least get feedback from either our stakeholders or people in our network. And then post-investment, we want to help the company, so we want to get things into buildings. And I'd say lastly, it's whether we're making an investment or not, we want to take what we're seeing in the technology world and help the physical real estate and operator side. I think because we are privately held with really a single majority owner who's my partner, we have things a little bit easier in terms of getting things done. So in the before COVID times, we all used to share an office. And I remember Latch came by, this was 6 or 7 years ago, and it took us maybe 48 hours to get that first Latch lock in a pilot in one of our buildings, which is the first live lock that anyone ever had out there. And it was a single 40-yard walk kind of across the hallway. It's like, hey, we think this is really cool. Please go find a door to put this on. And that's really all that it took. Now, it's not always that easy. But I think the whole organization has been built, as we're much newer, than Lennar, for example. Everyone is younger, with a forward-thinking, innovative technology approach, and it's been built purposely that way. So there's a little bit more buy-in from all sides to make these things happen.
What advice would either of you give to the people a lot of our audience are real estate executives from all different parts of the industry, some of whom may be doing a lot with tech, others are maybe just getting started. What advice would you give them in terms of how, if they're just getting started, how to engage with these startup companies, with these new technologies?
I'll give 2 points of advice, right? One, always listen, right? Like no matter what, and even if you don't think you're the one to be an early adopter and to get there, like you at least need to understand what's going out there and what your competitors and peers are looking at. And the second thing, and I think you heard this a little bit from how we, for example, are different from Lennar, be very, very clear internally and aligned on what your priorities are. And I've seen a lot of corporate venture firms, both in Proptech and otherwise, go astray when you have all these competing priorities and it's not very clear. Are you financially driven? Are you biz dev interested? Are you insight driven? You know, there's many different ways to skin this cat. And I think you need internal alignment to then know how to act and interact with the ecosystem.
So from our perspective, you know, being a strategic, corporate strategic is historically has, there's been a stigma associated with it that we've worked very hard to overcome. And so I would encourage all of my real estate brethren here to first of all, engagement, like David said, listening. We don't know everything. You know, a lot of these technology companies see our world through a different lens. They very quickly identify our problems and have a fix. And so, you know, it's conviction, it's commitment, it's listening, it's you know, in our case, or in the larger public company space, it's buy-in from the very top. You know, corporate very often brings in a mid-level participant that sponsors the investment. They take a board seat, and then unfortunately, they, for whatever reason, they don't stay with the company. Now someone else inherits the investment. They're not as passionate about it, and it gets lost. And corporates have a propensity to make all types of strategic promises, delivering their client, their customers, distribution, supply chain help. You know, I can go on, and unfortunately don't deliver. So there's a black eye that we have to overcome. And then the last thing I'll say that's very important is be very balanced when dealing with entrepreneurs, founders, innovators, meaning it's important that you weigh in with your advice, you know, your years of operating experience. But very often we find that the alpha comes out in the real estate types where they dominate and don't let the innovators innovate. And it's very important to let the innovators innovate and not, so balance counsel with, you know, with not being too overbearing would be my advice.
The other thing that we've seen working with real estate folks who are, you know, starting to think about this is that, especially larger companies, there can be a tendency to kind of want to figure everything out at once, get the one right solution, over design it, spend lots of time to figure it out, and before you execute anything. And you Eric said something at the beginning that I clicked with me, which is, you know, small wins first. Like, just go and get started. Not every initiative is going to work. Just like every startup that we invest in isn't going to be successful, but these are experiments. So you got to do a bunch of them and have more of a bias for action. Try and harvest those small wins to build buy-in and credibility, and then you can kind of go on to the bigger ones. Am I capturing what you were talking about fairly?
Yeah, precisely. You will fail. Like, venture is venture, and the likelihood is you'll fail more than you'll succeed. It's stick-to-itiveness and focus. And yes, don't try to boil the ocean, and, you know, just bite-size accomplishments, and it starts to snowball. And if you get it right, and if you start to you know, if you start with the early wins, the small wins, you'll start to garner attention from the rest of the industry, particularly in the startup world, and you'll find that entrepreneurs will want to work with you. You know, it's very much a relationship driven industry.
Well, there's a number of different topics I'd love to delve into on different segments of PropTech, but I also want to leave time for audience questions. So if anyone out there wants to ask a question, please use the Q&A button at the bottom of your screen, and we'll reserve some time for that at the end. I wanted to sort of switch channels though for a minute and talk about Miami specifically, because Miami is clearly having a moment, and I don't know how much everyone who's listening is, knows all of this story, but David's far from the only one who's moved here in the last year. There's been a mass movement of people, particularly in the technology and venture world, to Miami from New York, from Silicon Valley. The mayor of Miami has gotten a tremendous amount of publicity around this because he started engaging on Twitter with a lot of these folks, and he famously wrote, "How can I help?" When someone suggested, "What if we just move Silicon Valley to Miami?" And that one tweet had 2.5 million views, right? Everyone knows the mayor of Miami now, and he's been a real ambassador to try and convince folks to move here. But there's a lot of people saying, "Hey, this isn't real. This is just buzz," right? We've been here before. I remember in 1999, this was going to be Silicon Beach. A bunch of companies, mostly from Latin America, had moved to Miami, set up shop on Lincoln Road, was kind of the headquarters of Silicon Beach back then. And it lasted for about 9 months, and it blew up when the market crashed in March of 2000. And most of those folks left Miami, and there was kind of a tech desert for a while. So I guess my first question is for David, which is what inspired you to come back to Miami now?
Yeah, and I'll just give a little background context. I'll try to do it quick. So I grew up in the Northeast, was coming down here with family, had the typical grandparents in Miami Beach, came to school here 99 to 03, went back up north for law school and business school. I looked at moving my startup down to Miami. This was probably about 2011 or 2012. Basically, I was paying a ton of rent for office space for inventory up in New York. So I looked into a bunch of these emerging tech ecosystems like Miami, the Downtown Vegas project, Detroit. And ultimately, after coming down here, I said, there's just not enough here, not enough capital, founders, thought leadership, and all that. So I put that on pause, but I began checking in and building relationships with a lot of the people who are at the center of the ecosystem today. And I would come down a couple times a year. COVID hit and really everything changed. And so I think the driving force was, we're all going to be working remotely for at least the next year. Where can me and my family specifically kind of have a really good work-life balance? And maybe, and again, this was back in June when we made the decision, maybe this will accelerate all the things we've been hearing about the Miami tech ecosystem, from the last couple of years. And thankfully, with a couple of tweets and a little bit of luck, it feels like that momentum is increased. And now I think it's a bit of a competitive advantage, to be here. Venture is all about being early. And I've put myself at the center now of an ecosystem that has grown probably 10x since I've come here, in just 8 months or so, which is pretty incredible. And now it's on all of us to continue that momentum and keep growing from here.
So I'm very biased. Born and raised in Miami, pretty much second generation. Ties to the University of Miami, although I did not go there. Couldn't get in. Miami is. This is a moment in time that's, in my opinion, long overdue. And I'd be remiss if I didn't state that our headquarters have been in Miami since the 50s, and so for me personally and for Lennar, this is a very exciting time, the perfect storm. And David articulated some of those reasons. I'll add, we are a gateway to South and Central America. We have, in terms of live, work, play, very few places in the world offer what South Florida has to offer. Let's not forget the fact that we don't have state income tax, which was, I think, the initial driver pre-COVID for many people to descend into land in Miami. But Miami has a lot of work to do, and I think in order to keep so I'm a believer. I want to believe that it's here to stay, but there are some fundamental things that we must work on to make this a sustainable mission. And first, it starts with schools. People are moving here to South Florida, and the school system I'm talking for K through 12, is going to need a lot of enhancement. I feel that we need to think about our universities, start to focus on computer science, and we have to start putting out best of breed engineers, developers that can support these startups in the technology world. That's the advantage of Silicon Valley has had all these years, or New York has had all these years. You're seeing it here. I happen to be in Austin right now, but I've been here, for the last 2 days. What's happening here in Austin in and around tech is incredible, and I think as sustainable. So those are the things that I think we really need to focus on. I give the mayor a lot of credit. I love the position that he's taken. And I think it's going to take major employers like Lennar, who has been starving for tech talent for years. I can tell you from the Lennox perspective, boy, would we love to find top talent. So this is an exciting moment in time, and it's up to the community leaders and business leaders to make sure that this is not a false start like we had last time, to make this a true success.
You anticipated my next question, which is what's missing. I want to ask David.
Oh, sorry.
No, fantastic. I was going to ask David if you have anything to add to that. Like, what do you see is still missing here? What do we need to work on?
I think there's two things, and one of them might not be well received here, so I apologize. So the first one is there's a lot of dispersion physically, right? There's not like a real central hub, and the Miami ecosystem is growing, but it's still not big enough that you can have multiple hubs. And there's a bit of a pull, I think, between some of the real estate owners, whether Brickell or Wynwood, or some other areas are that central hub. And so you're missing some of that kind of serendipity and those collisions that happen, that you see in, for example, South Park in San Francisco or all over New York City. And the second thing is I think the universities all need to step up. I mean, at the end of the day, talent is key. Miami has an advantage in recruiting talent elsewhere here, but we also need to continually pump new talent, both technical and otherwise, into the ecosystem. And I think all the schools locally have started to kind of peek their heads up out of the sand, but there is still exponential improvement that needs to happen there.
Well, to that point, a decent share of the audience today are students, whether from the business school, the MRED program. For those that are interested in getting more involved in tech, what advice would you give those guys?
I think one, learn, right? Like read everything. When I was a founder, 13 years ago, I had to figure everything out on my own. Now, like there's a blog post or a tweet on every single topic. And also just start connecting, right? Meet with folks like who's on this panel, meet with each other, create your own formal or informal, clubs or idea sharing, and eventually kind of do the work, right? Whether it's a formal internship or connecting people, whether it's deal flow or talent, this is all about networks and relationships.
Great, thank you. Well, I don't see any questions coming in, so I can just keep going here. I've got a bunch of different technologies I'd like to get you guys' thoughts on. Maybe we could start with in the actual construction side. I know, Eric, you guys are doing some interesting things with modular or prefab modular, whatever you want to call it. You have a couple of different investments, Vive, Cover. How do you see Lennar using that? You talked about moving away from on-site construction to building in a factory somewhere. How do you see that playing out over the next couple of years? Is this 10 years out, or is this next year?
No, I think it's now. In fact, probably getting ahead of myself here. I hope Stuart's not listening, but we are about to roll out our first community in Dublin, California, Northern California, with a modular product by Vive. This will be the first of its kind. We're very excited about it, and look, it's not going to work for all markets, and there's still a lot of room to grow to get costs down. And so in markets where we have very high costs, particularly labor costs, like in Northern California, this is a real thing, and this is now. This morning, right before this call, I happened to visit a company here in Austin that's 3D printing homes. And I'm very negative on that up until this morning, I must say. I believe there is a very, that is real and that is here. And it's certainly for a certain segment of the market, the more affordable end of the market. But I think between 3D printing and between modular construction in a factory setting where you have quality and consistency, where you're not battling the elements, you can run, multiple production lines, 3 shifts a day, 365 days a year, eliminating a lot. Like we have a massive labor and material issue here in the States right now. Lumber prices are doubling and they're growing exponentially, as are other raw materials. We have to find a solution for this. And, I believe the time for this is now, and it's happening in real time.
Speaking of 3D printing, I know, David, you guys did a deal recently. Can you talk to that?
I think so.
Listen, I stepped
we
out of the box, Dave. You might as well also. Go ahead. Come on.
Yeah, we made
it's a family here.
On a company called Diamond Age, which is a robotic 3D printing home builder that builds on site with a gantry system. Their model is to partner with home builders so they could build, 5, 20, 50, 100 of these homes at a time. They are tackling, I think, as Eric alluded to, the lower end of the market. This is not for your high-end custom home. This is for the $200,000, middle America entry-level track home, where they can build, an as good or better product, not only significantly cheaper, but significantly faster. And that's obviously not only great for for builders and for eventual home owners, but one of the areas that we're most excited about is this labor shortage that everyone's talking about. So some of our plays in the space are attacking that a little bit more directly in something like a labor marketplace. We're investors in a company called TradeHounds, but then some of them are trying to figure out how do we build things taking into account a labor shortage with something like Diamond Age.
Another component to this, Tigre, I want to add, and it's probably a focus of both Alpaca as well as Lennar, is a heavy ESG focus these days. And it's not just in the wake of this administration. It's something that's been on our radar for quite some time. And just prior to COVID, that was, a central theme that COVID, stole its attention. But we are very, very focused on improving our ESG. You're going to hear us make some bold commitments to that end here shortly, like you're hearing many others. So we are working with our portfolio companies. I'm sure Alpaca is also. And as we look forward to potential innovators or potential partners to Lennox going forward, ESG must be a major part of their DNA. We all have that responsibility.
So we're starting to get a few questions in the.
It's about time. Getting nervous.
One of them is about, stable coins, or I guess, blockchain generally as a funding source or a new way to buy and sell real estate. There's a lot of people trying to figure that out. How do you see that evolving? Do you have an opinion? Have you looked at the blockchain solutions for this?
David, you just want mute. So does that mean you don't want to answer? I can take a first shot at it.
Go for it.
All right, look, blockchain, I can't say I don't know anyone that really has their head around the entirety of the complexities of blockchain. But through our lens, we believe blockchain is a real thing. And we look at it more through the lens of financial services, meaning mortgage and title, and how we record keeping, and the way that title has been done historically, notwithstanding the fact that we have made an investment in the title space in states title now called DOMA, who does not use blockchain, but is certainly on their roadmap. The way we keep books and records, the old school way of doing it, I think, is going by way of the dodo. Blockchain is going to play an important role in that going forward in terms of the crypto and all the currency. I do believe it's a real thing, and I do believe that before you know it, we will be trading homes in crypto. That's my opinion, David.
I think it's a when, not if. I'm a big believer in underlying blockchain technology. But if you go back to the beginning of our conversation around real estate being one of the laggards in the industry, like there's still a lot of unknowns and different protocols. I think most of the real estate world is going to let the rest of the world and industries figure it out. And then we'll find sort of the one or two real killer use cases, some of them that Eric alluded to, that specifically relate to real estate. So I think we're probably still a couple of years out, but we're starting to hear some interesting things going on.
Yeah, I would add that I've mostly been a kind of a crypto skeptic, but I also believe that there's something, you know, very useful in the way, and it's a question of how and when, not if. Notwithstanding that, I actually did make a small investment a few years ago in a company that is now selling land on the blockchain. So what they do, they haven't taken over the county land registry, but they title the property to a trust, and then the ownership of the trust is embedded in a smart contract, and you can buy and sell with the click of a button. There's websites for trading land, and some of them are using this system now. So in seconds, you can transfer ownership of a. I mean, the vision is someday you can sell your house that way. I think we're a very, very long way from that being reality. But some of this stuff is being deployed today at small scale and, you know, experimentally. Another question came up is around zoning, and for context, I don't know if you two are aware of this, but there's a couple of interesting startups that have come out of the University of Miami's MRED program that are related to using zoning data. One of them is called Gridix, another one is called Deep Blocks. But the idea is, can you provide developers with sort of a quick and easy way to evaluate what can be built on a parcel or on an assemblage of land as a way to sort of help planning or as a way to visualize for planning professionals to visualize sort of what the current zoning looks like in 3D physical space. Are either of you aware of either of those companies and or sort of the opportunity generally around zoning data? Do you have anything to add to that?
Yeah, we've looked at maybe 7 or 8 in the space, including we've been tracking one of the ones you mentioned for maybe 4 to 5 years. And I think the founder is great. It's a tough space, right? Because first of all, you need to go geography by geography and not just state by state, but sometimes municipality by municipality around the rules, the regulations. You need to ingest all these paper rules that can change on a dime, get them into a model. And then ultimately, like, even if you do all that, you can build a nice business, but I don't know if it unlocks tremendous value. It's more of like a time and cost savings. And so you wind up in like a SaaS model where you're charging a couple $100 per seat. And it's capital intensive and time intensive to build a nice, not game-changing business. And so I think that's why a lot of them have struggled to raise a lot of capital, which is needed to really get that flywheel moving.
Yeah, I totally agree. Did you not want me to add on to that, Tigre?
No, go ahead, please.
No, you don't want to hear what I have to say. So look, I think it's the way that approach, I think the addressable market is relatively small. I agree with David wholeheartedly. I think there's a holistic problem that needs to be solved relative to zoning. And that is, you know, like David said, every municipality differs. Every 2 miles, it differs. You know, an interesting statistic is we'll deliver more than 60,000 homes this year. There's not more than 200 of those 60,000 that are identically the same. And that is just crazy. So we need to come up with more standard zoning rules and regulations. Of course, it's not applicable from state to state, but from municipality to municipality within the same zip code, for goodness sakes. There needs to be more standardization.
But I think one of the questions that we had is kind of kind of goes to that point, which is it standardizing zoning or just even having a standard way of describing the zoning rules? Like, I don't know if you guys are aware of the OpenStreetMap project and the GTFS standard for transit, but basically it was Google who kind of said, this is how we're going to talk about transit schedules. And so if you open now Google Maps, you can see what time the bus is coming, what time the subway's coming, how they would connect. That is a standard because someone stepped in and said, here's a de facto way to describe this. Individual municipal transit agencies each had their own way of reporting that data. There was no standard. Is there an opportunity to do the same thing in zoning? It would make what these companies are trying to do much, much easier.
So yeah, I would think that would be a great start, would be to standardize the definitions, the way we do things, so the interpretations are consistent across the board. But I feel that, so then maybe that's a starting point. But clearly, what I mentioned earlier, I think is probably a much better solution. That's one man's opinion.
Can I, and if you have more thoughts on that, let me know. But Eric brought up a sort of a term and a point that I think is really important, specifically around real estate, when he talked about addressable market. We see so many pitches that talk about the addressable market in terms of like the underlying asset size, which of course, when you're in real estate is enormous. Like, oh, we're going after this $1 trillion market. But when you start peeling away the layers of the onion into the business model or to the subsector that they're going after, the business itself can be nice, but nothing crazy, right? Maybe it's $100 million revenue opportunity, which even at like SaaS multiples, maybe can get you to $1 billion. And so I think that's been an issue that the sector has had for a while, of building these kind of niche verticalized approaches. And instead of thinking about the asset value, really understand sort of the revenue or even ideally the profit potential of an underlying company. I don't mean to switch gears, but
no, it's an excellent point. We see that all
important point.
Well, I think we're kind of running up against the hour. Let me ask you each one the same question, but one last question, which is, if you had to pick one, sort of pull out your crystal ball, what's the next big thing in Proptech? I mean, we've all been, we've seen how the residential market, there's so many different models, all kinds of stuff happening, but what's the new technology that hasn't broken through yet that you're excited about and looking at maybe trying to invest in?
Dave, you're first. It's hard.
I don't have a good prepared answer. If we didn't just talk about it, my obvious answer would have been blockchain, right? If I think 5 to 10 years down the road, I think that's it. I think it's, and I don't know exactly what this looks like, but we've been focusing a lot on the money and the financing behind everything that touches real estate, right? Whether it's financing, leveraging, mortgages, insurance, those are sort of seem to be a little bit left behind, and there's some big winners there. But I think right now you've seen digitization and incremental improvements of old models. We haven't really rethought any of those models, and I think there's something big about to happen there.
Great. Eric?
I agree with that, and I probably would have gone in the direction also of the currency or the blockchain. It's becoming more and more relevant. But I still think we're very early on in how we're building these homes, and I think there's going to be a lot of innovation around it. Whether it's 3D, whether it's modular, whether it's in a factory, whether it's not. I think that's very ripe, and I think there's been enough failures now. So typically you see version 2.0, version 3.0. I think and I hate to use names, Katera, but we could, there's learnings from those, and there need to be a bunch of failures. We're seeing them now, and it's from those learnings that I think we'll come to a conclusion. And without some sort of standardization of zoning, like I mentioned before, that's going to be very difficult. And I think the municipalities are going to be forced to come up with some sort of uniform way of doing this. So anyway, I didn't give you a specific answer. It's not an easy answer to give. I don't have a crystal ball. If I did, I wouldn't be sitting. I would be sitting here today. Anyway.
No, thanks. So before we finish, let me just put in my small plug. If any of you who are listening are interested in diving deeper into this, please reach out to us at labventures.co. Our fund is, we have a similar vision to what these guys are doing in terms of bringing investors from the real estate space, investing in startups. And so if you don't have an extra $300 million lying around to put into a portfolio of startups, but you want to take a first step, that's what we're doing with our fund. Our investors are mostly real estate folks and want to make money, but also want to learn and find technology that they can leverage in their business. The second one is an event that actually we and Lennox are investors in called Blueprint, which is about all things Proptech. And it's going to be the first week in October 4th to 6th in Las Vegas. This is kind of the genesis of an event that we started in Miami a few years ago called The Future of Real Estate. It's now called Blueprint. It's going to be much bigger. It's really the premier Proptech event. And as people are starting to travel again, I think October is probably a good time to be in Vegas. So if anybody's interested in that, you can also reach out to me. My email is tigre, Tigre, @labventures.co. Thank you all for joining us. Let me hand it over now to Andrea.
Thank you very much, Tigre, and also David and Eric for a fascinating panel. I'm very glad that we've been able to cover so many different parts of the real estate space this year, even though we're doing it virtually. I want to tell you one bit of news, and then Professor Boll, Chuck has really big news. My news is that last Friday, virtually, we had the finals of the Impact Investing in Case competition in commercial real estate. And the judges picked 3 winners. They liked 3 projects equally. And I want to congratulate the University of Miami team of Business MRed students for being one of the 3 winners for their proposal for a site in Liberty City. And also say congratulations to the team from Wharton and to the team from the University of Chicago, our other winners. So our students are doing really, really good and socially beneficial things here. I was glad to hear about the ESG focus and the Proptech discussion too. Thank you, Eric. Chuck, take it away.
All right. Thanks, Andrea. And also thank you guys. It was a great panel, and especially Eric and David under challenging circumstances. Thanks for joining us today. So the big announcement, this, as I mentioned in the beginning, was a series that we created in lieu of our annual conference. So my announcement is that the annual Impact Conference will return next year. And for the first time ever, we're going to host it on campus. This will be the 10th annual conference. My team put together some images, and instead of picking one, I chose all of the above, of course. So in addition to having the usual great content that we have and keynote speakers, we'll bring you to campus. A lot of people have not been here in a long time. This is the Lakeside Village that now is done. The bandstand where we'll have some reception. This is the Shalala Center. So many facilities are really brand new within the last few years. A lot of people haven't been to campus before. We're going to organize some tours with the folks who designed them and built them and help put the campus where it is today, which is one of the reasons why tech is coming here. We have a beautiful destination, right? So that's the main announcement. And then on top of this, I can tell you our first keynote speaker, we have just confirmed, will be Sheila Johnson. Sheila Johnson is the first African-American billionaire woman in the United States. She is a co-founder of BET and the creator of the Salamander Hotel hospitality chain. So we're looking forward to welcoming you all back to campus. And we're moving ahead. Tech will be a big theme of this as well. We're working on tech speakers for the conference. So this is a good teaser, a good lead into that. Thanks, everyone. And enjoy your weekend. Let's all stay in touch. Thanks.
Thank you.